Good morning, Mr. Chairman, members of the committee. Eric Turek from the Kansas Insurance Department. Just one bill for introduction today, maybe more tomorrow. RS 2575. This concerns title insurance and repealing the controlled business notice and some other aspects concerning controlled business.
All right, Eric, thank you. Committee, are any questions? Any objection? Seeing none, it'll be introduced. Brock. Good morning.
Brock Rayler, General Counsel for Office of State Bank Commissioner. I request two bill introductions. First, RS 2409, which is the Kansas Money Transmission Act, and RS 2313, which modifies Uniform Consumer Credit Code and Kansas Mortgage Business Act.
Okay, great. Committee, any questions? Senator Warren.
Thank you, Mr. Chair. Could you just repeat the first one? I didn't understand some of what you were saying.
The Kansas Money Transmission Act. Money transmitters are regulated by our agency. This will be a new bill that will repeal the existing law and will create a new bill to regulate this industry.
Thanks for the clarification. Thank you, Mr. Chair.
It's a modernization of the Money Transmitter Act. It's currently on the books. Any further discussion? Any objection? See none, they'll be introduced. Thank you, Brock. Any other bill introductions? Okay. Seeing none, we will now turn our attention on a hearing for Senate Bill 345. We'll open that hearing and we'll ask Eileen to give us an overview.
Thank you, Mr. Chair and members of the committee. Senate Bill 345 would enact new law and would enact the Commercial Financing Disclosure Act pertaining to certain commercial financing transactions between a provider and a business. Section 1 is normally our definition section, and you'll see the definition of provider listed at subsection B16, meaning a person who consummates more than 5 commercial financing transactions to a business located in the state during a calendar year. The term also includes a person that enters into a written agreement with a depository institution to arrange for the extension of a commercial financing transaction by such depository institution to a business through an online lending platform administered to such person. Also in section 1 is the definition of business at subsection B6. The term means an individual, group of individuals, sole proprietorship, corporation, limited liability company, trust, estate, cooperation, association, limited partnership, or general partnership engaged in a business activity. Basically, if you're in business, it probably is listed in there. Section 2 provides for disclosures that a provider must make with each commercial financing transaction. These disclosures can be found in subsection B and include the total amount of funds provided to the business under the terms of the commercial financing transaction, the total amount of funds disbursed to the business under the terms of the commercial financing transaction, if less than the total amount previously described, the total amount paid to the provider pursuant to the commercial financing transaction, the total dollar cost of the commercial financing transaction, the manner, frequency, and amount of each payment, and a statement of whether there are any costs or discounts associated with the prepayment of the commercial financing transaction. Section 3 lists the exemptions from the Act, so the Act would not apply to those. Section 4 provides certain prohibitions placed on brokers who are the entities that arrange commercial financing product transactions between a third party and a business in the state. And Section 5 provides for civil penalties for violations of the Act and vests enforcement of the Act with the Attorney General. And with that, Mr. Chair, I can stand for questions.
Thank you, Eileen. Committee, are there questions? Senator Warren.
Thank you, Mr. Chair. Thank you, Eileen, for the bill brief. Is there anywhere in the bill that would require a provider to disclose an annual percentage rate or estimated annual percentage rate?
I believe all of that would be in the terms of the financing paperwork, but I mean, these are disclosures pertaining to, more global things outside of the transaction in summary, but you can ask the proponents.
I was just saying, since we're listing some of the terms.
Well, those are the
knew, but-
specifics called out in the bill, but the paperwork of the transaction is going to be, if you obtain any kind of lending transaction, you see disclosures, you see all the amounts, and you typically have to initial and sign off on them. So those would be disclosed.
Well, and that might be a proponent question, so thank you. Thank you, Mr. Chair.
Committee, additional questions? Okay, I see none. Thank you, Eileen. Well, sorry, Senator Pittman.
Sorry. Thank you. I know, I'm sorry.
Before the-
I was sitting here lost in the text here. Is this, just because I don't know the law as well as you do, is this an unusual thing to have civil penalties in this type of realm? It's not the first time we've done this, right?
That would definitely be a proponent question. I do know that it was specifically changed to reflect that.
Oh, okay, thanks.
Committee, additional questions? Okay, I see none. Thank you, Eileen. We will now turn our attention to the proponents for Senate Bill 345. We have Kate Fisher, who is here on behalf of the Revenue-Based Coalition. Welcome.
Good morning, Chairman Longbine and members of the committee. Thank you for the opportunity to testify today in support of Senate Bill 345. My name is Kate Fisher, and I'm an attorney with the law firm Hudson Cook, and I'm here today representing the Revenue-Based Finance Coalition, a group of responsible providers of financing to small and medium-sized businesses across the U.S. and Kansas. This product, revenue-based financing, is not a loan. It is an accounts receivable purchase transaction. Senate Bill 345 would require non-bank providers of commercial financing to disclose 6 critical pieces of information to their customers: the total amount of the funding to be provided, the total amount of funds that will be dispersed, for example, if any fees are deducted upfront, how much the recipient will actually get in their bank account, the total amount the business will pay back, the manner, frequency, and amount of payments, the total dollar cost of the financing, and a statement regarding whether there are any costs or discounts if the business pays back the financing early. Requiring non-bank commercial financing providers to give these disclosures will codify best practices and help eliminate bad actors. You may hear opposition because these disclosures do not include an annual percentage rate. It's also sometimes called an APR disclosure. APR is a consumer credit disclosure that measures the cost of financing over a specific period of time with required payments. 7 states have recently passed commercial financing disclosure laws, and of those 7, only California and New York elected to require an APR disclosure. The other 5 states have rejected APR, and the reason is that not all commercial financing transactions have a set term of required payments. For example, an accounts receivable purchase transaction does not have a set term for repayment, making APR, which measures the cost over a set time of repayment, a misleading disclosure. Senate Bill 345 would ensure that small businesses receive accurate information regarding the cost of commercial financing. And also, I'd like to briefly address the fiscal note from the Kansas Division of Budget. There's an estimate in there that there would be required 1 additional assistant attorney in the Attorney General's office, and also increased caseload in district court related to the civil penalties, I believe. As far as the increased caseload, Section 5C of the bill expressly provides that there's no private right of action under the bill. So we're not creating a private right of action to have a flood of lawsuits filed in district court under this legislation. And a full-time attorney sounds a little high, but I will go back and ask other states such as Virginia and Utah that have had experience with similar laws. In those states, they also have the Attorney General enforcing their commercial financing disclosure law, and I'll get more information on the cost. And happy to answer any questions.
Senator Pittman.
Thank you, Mr. Chair, and thank you for being here to testify. Could you just describe like the nut of this bill, the essence of what we're doing here with this? So we're gonna, from my understanding, we're gonna put civil penalties if certain entities don't do something right. And what we're saying is, when these small to medium-sized businesses get financed in this very specific way from these third parties, if these third parties don't disclose some information about the terms, they're subject to civil penalties as described in the bill? Is that what we're kind of doing? Or did I get that messed up?
Oh, that's right, and thank you, Mr. Chairman. The concept of the bill is to protect small businesses by establishing, or in a sense, codifying best practices for disclosures that will work across a broad spectrum of commercial financing. So responsible providers of commercial financing already do this. They already are telling their customers, this is how much money you're getting. This is what it'll cost. This is what the payment schedule will look like. This is what happens if you prepay. So it is setting that standard and putting in civil penalties if that standard is not met.
And then what is the reason that we need to do this today? So if they're already doing it, the good ones, as you mentioned, what's happening to, what's driving the need for this?
Sure. So responsible providers of small business financing want to make sure that there is a level playing field and that small businesses are getting accurate and consistent information so that they can compare across different financing products. So that's the reason.
And then a last question, Mr. Chair. The argument you are arguing against is, your position is the APR thing that's being requested by a number of other entities, it looks like, if I look forward in our testimony, you feel like that's not a standardized way that's fairly represents the type of financing situations that this specific third-party lending would do. It misrepresents, in your opinion, it has a key metric, APR, but it's not really representing what's going on underneath, so it could misrepresent the risks of this thing, or it's hard to compute. What's the kind of burden there again? Just real quick, repeat that.
Yeah, thank you, Mr. Chair. The concept of APR was created under federal law, the Federal Truth in Lending Act, and applies to consumer loans. In the commercial finance space, the types of products that are available are wider and broader than just loans. So, for example, invoice factoring is a very commonly used method of financing in the commercial finance space, where a factoring company will purchase an account receivable at a discount and then wait for the account debtor on that account receivable to pay. And the purchaser of the account receivable takes the risk, the credit risk, that the account debtor under the account receivable will be unable to pay. This is a purchase transaction that's governed by the Uniform Commercial Code. This type of transaction does not exist in consumer finance. And it is not a loan, it's a purchase where there is not a set time for repayment. So that is one example why the APR concept that measures set payments like a consumer mortgage over time really doesn't translate to commercial finance.
Thank you. One last thing, I hope. From your knowledge, is this the first time we're putting civil penalties like this in place around lending institutions and the providers of this thing? Just because I don't know.
Don't know the answer to that, Mr.
Okay.
Chair.
Thank you.
Additional questions? Senator Fagg?
Thank you, Mr. Chairman, and thank you for your presentation. There's also a scenario to where someone might not have to pay part of that back, too. So that's hard to put into an APR.
Yeah, that's right, Mr. Chair. In revenue-based finance, these transactions require a business to pay a percentage of their revenue to the extent that revenue is generated. So, for example, if a business sold 10% of their revenue up to a certain maximum amount, they would deliver 10% of each day's revenue as that revenue is generated. If business slows, that revenue could come to a trickle. And if, in good faith, the business fails, which happens all the time, unfortunately, with small businesses, there is no payment obligation. There's no right of the financing provider to sue them and say, you didn't pay me all that you owe me, because they don't owe anything. They only owed a percentage of that revenue that they generated. It's another reason why that concept of a fixed time of repayment just doesn't match up.
Senator Warren?
Thank you, Mr. Chair, and thank you for your testimony here today. On our agenda, it says you are visiting us from the state of Maryland, and your testimony has on it that you're with the Revenue-Based Finance Coalition, Washington, D.C. Have you talked with any Kansas-based stakeholders about this bill?
Thank you for asking that question. Mr. Chair, I am from the state of Maryland. There's a big football game happening this weekend in the state of Maryland, as some of you may know about. The Revenue-Based Finance Coalition has spoken with stakeholders. I have not personally, though, so I can't tell you with whom they've spoken.
That was going to be my next question, with whom? And they're not also proponents of the bill, so it's interesting that we don't have any Kansas proponents of the bill, but I understand maybe your coalition represents some of them. I don't know. Are they banks? Are they the financiers? Are they the providers? Who would be that coalition?
Thank you. Mr. Chair, the Revenue-Based Finance Coalition is made up of providers of revenue-based financing nationwide, so they do have customers in Kansas. But again, I don't know. I haven't spoken directly with those folks.
We don't know who they are, and they're not proponents here today. But if I can focus just a minute more, Mr. Chair, on the language of the bill. So on page 2 at line 22, it's part of the definition section, business. Business also means any individual. So what type of individual, what type of person would be subject to the requirements of this act?
Sure, thank you.
How does a person, an individual, do that? Or does it mean a person? Tell me about that.
Sure, thank you, Mr. Chair. So the intent of the language in the definition of business is to also protect sole proprietors, because very small businesses can be one person. My former mother-in-law, in fact, she had a small business that was a grocery store, and she never incorporated. She was a sole proprietor. So that is the idea behind defining business as including a person. The intent also is to only apply to commercial purpose transactions. So if a sole proprietor is obtaining financing for a consumer reason, that would be covered by the UCCC, which is outside of this.
And one last question, if I may, Mr. Chair. So an individual would never be a provider. Is that accurate in this definition?
Thank you. Mr. Chair, I have never heard of a financing provider being a sole proprietor. The mechanics of being a provider of financing require some sophistication. So I don't think that a provider would ever be an individual.
You mentioned factoring. This bill is not about factoring, correct?
Mr. Chair, this bill does apply to factoring. It applies to loans, closed-end loans, lines of credit, and accounts receivable purchase transaction. Those include purchases of accounts receivable, which are factoring transactions under the Uniform Commercial Code.
Well, appreciate your testimony, and I understand the intent is to provide more disclosure and some more transparency for our small businesses who are engaging in these type of account and financing. So thank you. Thank you, Mr. Chair.
Senator Olson.
Yeah, I think my question was answered, but yeah, on the East Coast, it's pretty common. Factors are kind of a big financing of small business. There's all kinds of notes. I've seen how that works. So I think this is basically more regulatory on them, just to know what that cost is, which I do support because I understand how that works. How about the online? Would this affect anybody? There's a lot of online lending going on today from out of state into state to small businesses, high interest or that. Would that apply to them?
Yes, Mr. Chair, the intent is to apply to any commercial financing provider that is providing financing to a business in Kansas. Providing, I think it's more than 5 transactions in a year to a business located in Kansas.
Okay, thank you.
Senator Gossage.
Thank you, Mr. Chair. I have a very simple question. Where do people complain now? The same complaints would go to the Attorney General's office.
Oh, thank you. Mr. Chair, I believe currently a complaint would go to the Attorney General's office already because there's not a regulatory structure. I think a complaint would have to be related to fraud, maybe unfair deceptive practices, but currently any complaint would already go to the Attorney General's office. So this bill would put a structure and a specific way in which to complain.
Committee, are there additional questions? Senator Pittman.
Thank you. Just a couple follow-ups. How many states that you know of have implemented something that's very similar to this type of language?
Yes, thank you, Mr. Chair. 5 states have implemented legislation that is very similar to this language. And then 2, California and New York, have implemented commercial financing disclosures that are far more complicated than this language. In fact, the California law required like 50 pages of regulations to implement it. So 5 states so far have adopted very similar language.
And then the last question I have is the target of the civil penalties are the providers, not the ones, let's say we have Kansas businesses that are financing through some national firm. It's the providers of the financing that would be subject to the civil penalties, not the people who are doing the borrowing, right?
Yes, thank you, Mr. Chair. The penalties are solely directed at the providers of financing if they failed to provide these best practice disclosures.
Senator Holscher.
Thank you, Mr. Chair. If you touched upon this, and I missed, my apologies, because I was reading something here from one of the opponents, and they indicate that they oppose the bill in the current form, but propose amending it to include APR. And is that something that's that you feel positive about, or can you expand upon that? And again, if you talked about this and I missed it, my apologies.
We're happy to talk about APR, Mr. Chair. APR is a concept that comes from the Consumer Truth in Lending Act, and it applies to loans. It seeks to measure the cost of financing over a set period of time with specific payments. So a consumer car loan or a consumer mortgage or a consumer credit card, as we all know too well, we have payments that we have to make at a certain date. This legislation does not have an APR disclosure because the universe of commercial financing is broader than loans. For example, there are invoice factoring transactions, which are purchases of accounts receivable that are governed by the Uniform Commercial Code. Those transactions are a purchase, they're not a loan, there's no term, there's no payment schedule. Sort of round hole, square peg, to have an APR disclosure, trying to shoehorn that in really doesn't work. And unfortunately, what it results in for products that are not a loan is a misleading disclosure, because it says essentially, you're making payments over this period of time, when in fact that's not what the transaction is.
Okay. Senator Kluse.
Thank you, Mr. Chairman. Just circling back to something Senator Warren had mentioned concerning businesses in Kansas and not having any proponents. It would be nice to know and hear from proponents of this in Kansas in particular, because I'm asking myself, okay, 5 states, why Kansas? Just food for thought.
Thank you, Mr. Chair.
Do you wish to respond?
We will take that into advisement. Thank you, Mr. Chair.
Senator Fagg.
Thank you, Mr. Chairman. So it says that you emailed one of these to each one of them, right? So I would say if you read this, this will help you a little bit. So, thank you.
Okay, thank you very much for your testimony today.
Thank you.
Is there anyone else who wishes to testify as a proponent on Senate Bill 345? Okay, we will now turn our attention to the opponents to Senate Bill 345. Via WebEx, we have Miles Zeller, Policy and Advocacy Coordinator with AltCap in Kansas City, Missouri. Miles, are you with us? Okay, I guess we do not have Miles. I believe. You do have a copy of his written testimony. And let me call attention to an opponent that is written only from the Responsible Business Lending Coalition, and that testimony is in your packet also. Is there anyone else that wishes to speak to Senate Bill 345 in opposition? Are there any neutral testimony? Okay, seeing none, we will close the hearing on Senate Bill 345. Committee, tomorrow we will have an update on our papers from Alan Conroy, which is always very informative. So with that, that completes our work for today. Have a great day. We'll see you tomorrow.